plus 17 billion net gamma. The buffer is massive, but the ceiling has already been breached. This is the Gamma Brief. Good morning. It is Wednesday, May 6, 6:45 a.m. Eastern, and ES futures are trading at 7,342. Yesterday's call nailed the containment zone with the 7,300 call wall holding exactly as projected into the close at 7,259. If dealers are forced to chase this overnight gap above the call wall, then positive gamma friction flips into breakout fuel. We are operating in a positive gamma environment underpinned by plus $17 billion in net dealer positioning. With the VIX softening to 16.63, the baseline mechanics dictate volatility compression, where dealers dampen movement by selling into rallies and buying dips. The gamma flip level sits 109 points below at 7,150. While this distance confirms the positive gamma regime, the pre-market positioning severely tests dealer containment. The market geometry is critical this morning. The put wall rests at 7,150 and the call wall is defined at 7,300. ES futures at 7,342 have already breached the call wall. Dealer gamma resistance has failed. ES has already cleared both R1 at 7,239 and R2 at 7,277. The only remaining upside resistance was the call wall, which is now below current price. The 76-point expected move reaches up to 7,418, mathematically projecting further extension beyond the 7,300 level. Overnight reports of US-Iran diplomatic progress drove a sharp reversal in crude oil, stripping the geopolitical premium from the tape. Simultaneously, headlines regarding an Apple-Intel chip partnership boosted tech sentiment, pushing ES up 0.75% while VIX dropped 4.3% and the 10-year yield fell 2 basis points. Beneath the surface, sector rotation favored defensive leadership, with consumer defensive and basic materials both adding 0.7%, while communication services lagged at minus 0.9%. Okay, today's risk radar carries a moderate rating. At 8:15 a.m. Eastern, the ADP employment change data drops. A significant miss or beat here could dictate whether the overnight gap holds. We then have a slate of Fed speakers, with Muslim at 9:30 a.m., Goolsbee at 1 p.m., and Hammack at 1:30 p.m. The asymmetric risk lies in a hot ADP print that forces ES back below the 7,300 call wall, trapping late upside chasers. The environment is consistent with defined risk directional setups, assuming the breakout holds. It is hostile to neutral income structures while trading above the breached ceiling. A failure to sustain above 7,300 invalidates the upside thesis and returns control to the range-bound playbook. We are at a structural crossroads where overnight momentum has overpowered dealer resistance. A sustained hold above 7,300 shifts dealers to forced upside chasing, while a break back inside the wall restores the mean reverting friction. The regime is range-bound, but vol is elevated. Size down, let it come to you. Level set, bias defined, good luck out there. If this daily breakdown gives you an edge, hit that like button and make sure you're subscribed so you don't miss a session. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk, manage your size, and trade your own plan.